I guess in today's video I am going to break down two powerful intraday trade setups from Hopi's Goldbach system. One focused on balance and the other one structure shift. Let's start with the first one, the equilibrium trade plan. This plan is all about playing within the core balance zone of the market. We identified two key equilibrium levels, that is 47 and 53, which act like a center of gravity during the session. Price usually hover around these levels, creating balance between buyers and sellers. Now, in these balanced states, there will be liquidity traps, buy and sell stops sitting just between the equilibrium and the nearby mitigation levels. Okay guys, here's how we trade it. We wait for price to touch one of the mitigation levels, either 47 or 53, which is our mitigation levels. Once it does, we enter the trade. Okay, our target is the opposite mitigation level, giving us a clean 14 pip profits inside an 81 PO3 dealing range. Okay, it's a quick, controlled and highly repeatable trade, guys. Perfect when the market is respecting equilibrium levels. Okay, and the next one is the breaker trade plan. Now let's shift the gears. The second plan works best after a structure break and the liquidity sweep. Okay, here we are looking at a breaker zone, either 59 or 71 or 41 and 29. So that is which is our breaker blocks. Okay, one is for premium and then another one is for discount, and we aim to trade towards the extremes, the session high or low. Here's the flow. First, we look for a breaker formation within the 59, 71 or 41, 29 zones. The 51, 59 and 71 block is for premium level. Okay. After the breaker expands away, we wait for a short-term high or low to be traded through. This conforms liquidity gap. When price retraces back to the 71 or 29 level, that's our entry. Okay, our exit is at the high or low of the day, securing a strong 24 pips move in the 81 PO3 dealing range. Okay, this is slightly more aggressive trade, guys, based on momentum reversal after a trap and break. Okay, so to summarize, equilibrium trade plan and the breaker trade plan. So the equilibrium trade plan is balance on range play, fast in out, target opposite mitigation, and the breaker trade plan is structure break, trap confirmation, entry on retrace, target extreme. Okay. Okay guys, we are looking at a PO3 dealing range. If it is 81 pip within that range, we identify that our key equilibrium levels, which is 40, 47 and 53, and the 47 is for discount level, and the 53 is for premium. Okay, these levels are not just numbers, they act as the balance points between buyers and sellers, showing us where the market is likely to make a decision. Okay, now here the setup. We wait for price to hover or consolidate around this equilibrium levels. Between these levels and the outer mitigation block levels, there will be a clear liquidity, buy stops and sell stops. Okay, just waiting to be swept. The entry triggers happen when price hits one of the mitigation levels, either 47 or 53. We don't chase the markets, we let it come to us. Okay, once the mitigation level is tapped, we enter the trade and aim for a clean 14 pip target, exiting at the opposite mitigation level. That's it. High probability, guys, low stress and well defined. Okay, this setup is especially powerful in a ranging or balanced market where the price respects equilibrium boundaries. Okay, so if you are looking for a structured and logical way to take trades with precisions This plan is great to master, guys. Let's look this. Okay. And the other one is breaker trade plan. In this plan, we are working with a PO3 dealing range. Assume that PO3 dealing range is 81. Okay. In this plan, we focus on two key zones, which is the breaker levels, which are either 59 71 or 41 29, and the high or low levels, that is 100 and 0. We know that levels. Okay, here's how the setups works. First, you want to see a breaker forms somewhere within those breaker zones, either between 59 and 71 or between 41 and 29. Okay, this breaker is usually a result of a failed move and marks a shift in market structure shift. Once the breaker is formed and price expands away from that zones, wait patiently. We will wait for price to take out a short term high or low. Okay, this confirms liquidity has been taken. Okay, now here's your entry. When price retraces back to the 71 or 29 level, that's your moment to strike. Okay, you enter with the precision, knowing that the market has already made its intention clear. Okay, your exit is simple. Aim for the extreme, either the high or low of the range 100, which is 100 or 0. Okay, this setups gives you a clean 24 pips move within the 81 pip daily PO3 range. It's powerful, guys. That's powerful play that combines structure, liquidity and timing all in one clean setup.